Okay, Mega team, welcome back to the channel, guys. Thanks for tuning into today's video. We're going to go ahead and update Bitcoin today, talk about the price action, talk about what we think is going to happen next, and talk about what we're seeing right here in the charts. If you've got any questions, leave them down below, and of course, subscribe to our Telegram channel. Links in the description. Get updates to all of our analysis, charts, videos, information, whole range of more stuff you can see over here. And if you're interested in VIP, you can contact me directly via Telegram to join our trading channel, where we get all of our trades, a whole range of more stuff. As you can see, last month's 27 wins, 7 losses, and that was not even including half the scalps unofficial trades we did. So let's go ahead and get into it, guys. Bitcoin, well, it's kind of still in that same position as it was, a few days ago. And I don't mean by price, I mean by range. So price, we've actually gone up a fair bit. In terms of price, we've pushed past 20,000. We've broken 19,800 resistance. We broke through that that major trigger point, which was 19,800, and we kind of found some support on that again, retesting. So in terms of price action, we've done quite well. In terms of ranges, we still have massive resistance above us that we do need to break, and we're not really in the clear yet. And I've heard a lot of people saying, oh, well, or just in general on Twitter, the bear market's over, the bear market's over, the bear market's over. And my answer to that is no, the bear market is not over yet. We still have some room to go before we can actually say the bear market resistance is broken. We'll come back and talk about that chart in a second. But coming back to this chart on a short-term time frame, we'll quickly discuss what we're seeing. So we've talked a lot about this range in the last few weeks, and everyone who's been watching the channel would already know about it, so we're not going to go over it. All I'm going to say is the red lines are major triggers, major resistances and supports, and the green lines are minor triggers, minor resistances and supports. For us to head back down to 17,600, we would need to lose 18,400. Losing 18,400 will be the confirmation that we're heading back down, okay? On the contrary, guys, pushing past 19,800 was a confirmation we were heading into the 20,272 to 20,454 range. And we actually did see that. It played out perfectly, exactly as expected. These triggers indicate potential strong moves in the directional break which occurs. Okay, so we're looking out for these horizontal triggers. They're incredibly precise when predicting price patterns and market movements more specifically. So what happens next? What are we looking at now? Well, the triggers that we did break are still triggers, meaning if we lose 19,800, okay, if we lose that level down on the downside, we can expect a push back down towards at least 19,450 to this uptrending black line, which is sitting around 19,271, currently from present price. So it's obviously diagonal, so that price point can change, but our horizontal level is around 19,450, 19,470. On the flip side, if we're able to push upwards here, break through this resistance range, and the key level to break is 20,454, we are able to push upwards and retest the downward sloping resistance, which we can see in the chart over here, which is sitting above current price, so around 20,800. Draw it across to a 12th, it's around 20,400. So between 20,400 and 20,800 is our downward sloping resistance. Most likely, if we break through, we retest it around 20,600, 20,700 range. Now, this is where it becomes interesting. If we're able to break upwards through that resistance range, as you can see here, a lot of resistance, guys, and we're able to break through or upwards that downward slope resistance, we could see a strong push upwards towards that 24,000 range. And the reason I say 24,000 is because if we go back to our main chart over here, the 24,000 range, all right, occupies the upper resistance of this major year-long horizontal resistance range. If we extend this back, we can see this horizontal resistance range over here. And we've talked a lot about this a few months ago when we were occupying this range up in July, August. We're talking a lot about that 24,000 range, that 23,900 range. That is the main trigger. That is the big bear market trigger that we need to break above to send us into a new uptrend. Now, the bear market will end when we break through this downward sloping black line, but that will be where we get this strong impulse upwards into that range to retest the bear market resistance. So if we're able to break through this short-term diagonal resistance, we have a chance at pushing upward to a range that will enable us to finally break out the bear market. So it's becoming quite interesting. It's becoming quite tight. And I think right now, guys, not the best time to be becoming overly bullish, overly bearish On the short term, look at the short term structures, trade the short term structures. As we can see in the short term, nice falling wedge. Okay, nice falling wedge on Bitcoin. We do expect a push back upwards at some point, whether we come down here first and retest or push upwards, or whether we just break out here and push upwards, we do expect a retest of the zone. For us to determine what's going to happen next, we have to see how the price will respond within this level. We could triple top here, okay? We could print a bearish divergence. We could create a lower high. There's a lot of things that could happen here that could send the price back down. So there's no point getting overly bullish until these major resistance levels breaks. And I always say that until we break resistance, resistance is resistance, and it should be assumed that until resistance is broken, it shall be treated as a resistance and we will reject. So until proven otherwise, we do expect a rejection from that point, but we do expect a move upwards into that range from this falling wedge. So that's the short term, guys. Keep an eye on it. The most important levels on the chart right now are these two red lines, okay? These two red lines are the most important prices to be looking at. 19,800, it's actually 19,790, it's slightly lower than 19,800, and 20,454. Those two singular price points are going to determine the next move for Bitcoin. If we break downwards, we will continue downwards. If we push upwards, we will continue upwards. If we break through this downward sloping resistance, we are going to have a nice rally to the upside, potentially hitting that $24,000 range, 23,000, 24,000, which can attempt another push upwards to that bear market resistance. So it's getting quite interesting. Now, if we take a look at Bitcoin dominance is looking really good. We've pushed upwards through this major rejection zone. We've got rejected on that downward sloping resistance, but we've found support again on that zone, which is nice to see. I'd really like to see this candle push through here, but again, we have to wait and see what happens. We can't really apply too much analysis to the Bitcoin dominance. DXY is looking at 112. Now, it went down to 110, as we predicted. It's come back up to 112. It is looking like we're finding some resistance here. It's looking weakened. We can see, we can draw a horizontal in over here. We can see we're finding some degree of resistance at this point. Obviously, we've acted as resistance at this point prior. There's not too much point doing too much of analysis on the DXY. Like I said, there's so many factors that can influence how this price moves or how the DXY moves that are just out of our control, and there's no real point doing too much of analysis, but it does look like we're losing strength on the DXY here. It looks like it is turning down. What I like to use is the USD AUD pair. The USD AUD pair is actually really strongly correlated to the DXY, of course, because it is the strength of the dollar, but more importantly, it's actually strongly correlated to how Bitcoin performs. I generally have been noticing every single time the USD AUD rises, Bitcoin drops, and every time it drops, Bitcoin rises. So we're seeing a potential top out over here on some sort of bull flag formation, suggesting Bitcoin could rally upwards. And of course, we have that falling wedge in the short term, which actually confirms that fact that we do have this potential upward swing coming on a smaller time frame. Total cryptocurrency market cap is still worrying me. This is the one chart that does still worry me because we are still in a descending triangle, and descending triangles are bearish patterns. So I am worried about this, because if we do break through this trigger, that will be the confirmation we're heading down, 12, 13,000 for Bitcoin. So keeping a close eye on that one, guys. And of course, the brave new coin liquid index looking decent still. Still got support down over here at 17,600, pushing up, got a few green candles printing, nothing too intense, nothing too drastic has happened here, but it's still looking pretty solid. I'm gonna leave it there, guys. I hope you enjoyed today's video. Nice and short and sharp, didn't want to overload with information. I didn't have a lot of sleep last night. I'm feeling pretty drained, maybe even a little bit sick. My partner's been sick for the last few days, so I hope I'm actually not gonna get sick, but I hope you enjoyed the video, and we'll catch you guys tomorrow. Cheers.